Hello to all traders and welcome to another video brought to you by Orbex. Today we're looking at stocks in the form of Microsoft and Google's parent company Alphabet. Both missed earnings expectations in their earnings call yesterday. Microsoft actually rose in extended trading by 5% on a better outlook, but however missed these Wall Street expectations. So let's look at the figures today then. So earnings came at $2.23 per share, adjusted from $2.29, and revenue came in at $51.87 billion versus $52.44 billion. Now, Microsoft is blaming the Chinese lockdowns, which affected $300 million of its revenue, and also the Russia-Ukraine conflict, because it had to scale back its operations in Russia as well. So these two big factors in the last 3 months have affected Microsoft. So they say. Alphabet, on the other hand, they did actually rise in extended trading as well, but missing expectations. So their numbers were that their revenue growth slowed to 13% in the quarter from 62% a year earlier. So if you remember, a year earlier when the lockdowns were fading out, a lot more people were using Alphabet services as the lockdowns did actually come to an end. However, now things have changed quite dramatically in the last 3 months, and actually in the last 6 months since the year began. So what is in store for the next 6 months at least for these two big gigantic companies in the market? So look on Microsoft first of all today. What's interesting on the daily chart is I've been tracking this kind of downside impulse. You know, with having this degrowth, let's say, if that's even a word. We're looking to see what is even in the markets for Microsoft, especially for the upside. Obviously, trading CFDs is a little bit more beneficial because even on the downside, we can actually still make profits, and a lot of big profits have been locked in. If we look on the back end of 2021 as well, where we did see a lot of earnings season misses for Microsoft, this has been the second in a row now. We've seen this calamitous slide to the downside now, and you know, this bearish candle that has left on the previous session, we're expecting prices to kind of engulf in the Ichimoku cloud when the market does open shortly. However, will this be enough to salvage Microsoft's 2022 and get back to these lofty highs that we saw previously? Now, this is at the beginning of the year. Just wanted to point it out. As I said, we've had this downside channel, and now we're just seeing, you know, we can put it roughly around here where we saw the last couple of swing lows, but now we're seeing it pretty much be depressed in this area here, roughly going towards the $200 mark. So that's quite significant as well, because if Microsoft do continue this path, it will actually lead to possibly more of a letdown for the shareholders. At the moment on the technicals though, we are trading just below the Ichimoku cloud. The Ichimoku cloud is giving me the direction of where the trade will most probably go next. But as I said, when that market does open shortly, we are expecting a slight jump roughly to this zone here, but that will be an engulfment in the cloud, and then we'll see if it can actually punch its way above the cloud here, above the top border, or stay depressed even lower. So a lot of traders want me to always look on the 4-hour chart as well to see the intraday outlook, to see where we are heading. Unfortunately, if we're looking, well, for bulls especially, if we're looking at this choppy nature here, we are now looking for another leg lower. As I said, we are expecting prices to jump when the market does open, but it depends if we can get above these recent highs here, because it is actually being weighed down quite significantly. So with that being said, let me know your thoughts on Microsoft and where it's going next. So if we look on Alphabet as well, or Google's parent company as it is more well known, it is actually in more of a depression as well. If we look on the back of the last swing high, roughly about the end of February of this year, this was probably the yearly high that we saw. It has actually again been very, very depressed, very weighed down by obviously more COVID lockdowns and also Russia-China tensions, like Microsoft did actually say as well. So it's not only Microsoft that's been affected by these turbulent macroeconomic news events, it's also other companies as well. You know, these big tech stocks are really being weighed down, and not only that, even the indices as well. So if we're just focusing on Alphabet though, at the moment we've got this choppy action on the daily chart, so we are expecting another move to the upside, because if we do break the last support that we saw roughly about the $105 range, then we could be in for these yearly lows that we didn't see, well, since the beginning of 2021. So that would be quite significant there. On the other hand though, if we look on the 4-hour chart, I have been tracking this as more of a consolidated sideways movement if we just remove this so it's a little bit easier to see. As I said here, finding slight support at the moment, but it depends if it's going to start moving lower. We are expecting another bounce though to the upside for it to be testing these recent highs as well. The Ichimoku cloud is quite thin, which does mean that it is easily penetrable. There's not a big cloud engulfment, so that will be quite good for an easier direction. So if we do start seeing prices move higher, there is the likelihood that we could see these fresh highs hit once again, roughly up to the $115 mark. So just have a look at that. If you're looking at tech stocks, obviously look at the earnings season calendar, because there are some big names coming up this week, and obviously we are in for more news as we get into the back end of the trading week as well. So that's all from today's Stock Watch video. Thank you very much for joining me, and we'll speak again tomorrow. Bye for now.